Hey everyone, it's Zach with Palantir Research. Palantir's latest quarter basically solidifies further that Palantir belongs in the S&P 500. They're able to hit GAAP profitability 5 times in a row now while still demonstrating it's here to stay, as well as being a priority in their guidance from management. And even operationally, they're GAAP profitable, so no accounting tricks needed per se. But regardless, we have a different video today, and I'll walk you through an interesting exercise that can speculatively here put a number on how much Palantir may have to gain just by being included in the S&P 500 officially. So hitting all the criteria of the S&P 500 eligibility, especially with the new rules allowing Palantir share structure to be eligible, it's pretty much a matter of time to hear when they'll actually be included. Note the S&P will rebalance quarterly, so it may be coming up next month or possibly the next quarter there on their decision, but regardless, without anything going super wrong, it's pretty much guaranteed. Now, what are the effects of this and how can we figure out how much money may flow into Palantir? And note, this is important here, do not use this as a factor in any investment decision making, at least for the numbers I'm showing you. This is highly speculative with very large numbers that can fluctuate, as well as only being estimates, so a huge disclaimer and warning here first. But the process of how we get these numbers is more important to me, and every individual investor can do this themselves and play around with it. Now, putting it all on the screen here so you can see already this value of $3.4 billion of possible inflows. But remember, there's a big caveat too, just because we calculated this out, funds may have already flowed money into scooping up Palantir in anticipation for S&P inclusion. Therefore, this would be an overestimation. But starting from the very beginning, you can see that Palantir shares outstanding is around 2.19 billion. And if we multiply that by the share price here, we get their total market cap of $53.4 billion. Now, the S&P 500 weighting, we actually utilize the float market cap, which is the shares that are actually freely traded and not just locked up by insiders there. So the weighting in the S&P 500 would actually be based off that lower number. So remember, this is $47.5 billion. Now, to find the estimated weighting, we need to know the total S&P 500 market cap, which is around $42 trillion or 42,000 billions. So dividing our float market cap of $47.5 billion by the huge 42,000 billion, we get a weight of 0.0011, or in percentages, 0.11%. This is not unusual considering big tech with their trillions of dollars of market cap taking up the huge majority there. And for perspective, 500 companies in a pie of 100%, you'd be a monster company already if you're only 1% of that index. But either way, back to the 0.11% weighting. Now, if we estimate the amount of dollars in the index fund, so I found lots of different figures here, so it's going to be very wild, but $11 trillion in all index funds per se. Maybe around $3 trillion of that in S&P 500 index funds. I'm just pulling that out of thin air. Then we can see that $3.4 billion of inflow comes from the 0.0011 weighting and $3 trillion there. And if institutions were already buying, we can see a smaller influx going into this. But as a percentage of market cap today, that $3.4 billion is around 6% of Palantir's market cap. Now, like I said, there's a big warning. These numbers can be flat out wrong, like the total invested and the fluctuating market cap of the S&P, as well as Palantir's market cap. So regardless of the numbers you find with your estimates and want to plug in, I think just understanding the S&P phenomenon is the important lesson. Although there may be short-term effects in the price movement, the real key to understand for me personally is that this brings a level of ownership stability to Palantir. Institutional ownership can move big due to their deep pockets, but also they don't just dump everything at once unless there's clearly something fundamentally wrong. And being in the S&P 500 basically guarantees they need to maintain a certain percent of weighting of Palantir shares. Plus, the reputational effects for the management touts being on the S&P 500 and being profitable for the company. Now, customers want to know that they're invested their time and money into a product or service and company to actually help grow their business, and knowing there'll be partners around to support and continue helping them. That's a risk doing businesses with a startup that's really new and unproven, and they can go away at any time, or even just an unstable business model that can't sustain their operations. The S&P 500, if you're in there, you're basically stable. So let me know your thoughts on this. Are you looking forward to S&P inclusion for Palantir, and do you think will have a noticeable effect? Or maybe it'll end up being business like usual, who knows? And also, shout out to my channel member here from Mios for posting this video idea. Appreciate all the support here from you and all my channel members of the channel. It means the world to me. But thanks for making it to the end, and I'll see you in the next video.